Good morning. My name is Sean Dexter, and I welcome you back to the Mango Crow for your daily Bitcoin analysis video. We have a brand new month. Happy October to all of you, and we're going to jump right into it because this video is going to be a follow-up to the video that we did leading into the monthly close. If you guys haven't watched that video, I really recommend it. It's only a 7-minute long video. But now that we do have the monthly close, let's go ahead and see what transpired. If you guys do remember, we talked about how there was a battle going on at the $65,000 level. That $65,000 level for the monthly close was really important. If we got the close above $65,000, then the range would have been between $65K and $68,000. Essentially saying that our next target would be $68,000. However, if the bears stepped in, and boy, did they need to step in over there, if the bears defended the $65,000 level, if the bears rejected the bulls from claiming the $65,000 level, then in that case, our targets would be around $60,500 to $59,800, right? And right over here in our video, we drew out a zone for us to look for if the bears successfully defended that $65,000 level on the monthly time frame. And guys, that monthly time frame was very important, right? Which is why, even though I was so tired, I came out there and did a video leading into that monthly close. The zone over here was where we were looking for Bitcoin to come down to for a bid opportunity. Okay, that would be a high-low opportunity provided Bitcoin came down under there. And the reason for that was because it would be a very simple trade to risk manage, and it sets up for a asymmetrical opportunity, a move all the way up to $120,000, right? So that's a 2x trade to the upside, while the risk was extremely low to the downside. So let's go ahead and see how it played out for Bitcoin. And right over here, you can see that we have a zone that we drew out coming in at around 60,065, right? That's the top of the zone, and the bottom of the zone is $58,383. Now, last night, we tapped the top of the zone, right? We had initially front run it. As you guys can see, we hadn't fully tapped it, but if you guys have been following Mango for a while, you guys know that these kind of wicks over here often get revisited, get retapped, because there are lots of stops placed right over there, because there are lots of traders trying to play for the reversal move. They long somewhere around here and they place their stops over here. And what do markets do? The markets come and hunt out their stops, right? You can see we came down there, tapped our zone as well, tapped the liquidity area as well. And now the big question is, do we come down and test the bottom of the zone, or do we actually bounce from over here? It doesn't really matter one way or the other, guys, because you shouldn't be positioning in a way where you get stopped out or you get pushed out of your trade simply because we come back into the zone here, because this entire zone is support. Remember, in this video here, I drew out the zone for a reason. The Tenkin and the Kijun are both your areas of support, because our forecast was that the Tenkin was going to come down to live underneath the Kijun, and the Kijun cross over the Tenkin. We're going to show how that played out as well very soon. And hey, I know all of this might be sounding a tad bit complicated, but if you guys are new to Mango, just keep watching, keep learning, and over time it's all gonna be second nature for you. And if you guys are on the seed program, just rewatch the Ichimoku module. All of this is gonna sound like baby stuff to you. Okay, so remember, over here in the previous video, we were looking at the 4-day Ichimoku template, and at the time the Tenkin, this blue line over here, was still living above the Kijun, the red line over here. It was inevitable that the Kijun crosses over the Tenkin. It was going to happen. And when you see the Kijun cross over the Tenkin, you often get a retest of that TK cross. It's a magnetic effect, guys. It's a high probability trade, which is why I drew out the zone over here. Now, I'm going to switch on over to the live charts and see how things played out. And right over here, you guys can see that if I zoom in, the Kijun did indeed cross over the Tenkin. It's now living above the blue line, and price came down to test the TK cross right over there. And as we can see, price is being supported over there. That is a good sign. What we don't want seeing is price losing the TK and losing the cloud as well. That would be a huge win for the bears, and at that point we'd be looking for a revisit to around $54,000 at the minimum. But the more likely play is that we could potentially see Bitcoin revisit the $50,000 region at the bottom of the cloud. But the bears have a lot of work to do before we can even think about those levels. At this juncture over here, we are seeing support. We are seeing the bulls step in, and support should be treated as such until it is lost. You cannot get scared just because price is coming down, guys. Just like you cannot get excited just because price was going up. Because while price was going up, everyone was getting excited. Right over here at resistance, you should have been cautious. Usually when price is going up, unless it is a blue sky breakout, you should always look for resistance. And similarly, when price is coming down, you shouldn't be getting scared. You should be looking to see whether it is a high probability support zone. And the key word over there, guys, is probability. Nothing in life is certain. And right over here too, this was a high probability area for support, and now we're seeing the support. But hey, there's a lot of time before we close this 4-day candle, and as long as the bulls are willing to bid Bitcoin and hold it above the zone over here that I've marked out for you guys in the previous video, I think we are fine. Speaking of which, let's go back on over to this video over here, and I want you to draw your attention to the right hand corner of the screen right over here, this Bloomberg television thumbnail that reads Bitcoin plunges on geopolitical risk. And how often have we seen this happen? Price rallies into a key technical resistance, and just as it approaches that resistance, there's some major event that acts as a catalyst for that level being respected. And in truth, all we needed to do was follow the TA. Over here at Mango, we weren't following the news, we weren't following the war. All we did was say, hey, if this monthly does not close above this level, we are going to expect price to come back down to the zone. Now, some of you guys are going to say, hey, Sean, what are you trying to say? Are you trying to say that your lines on the charts predicted that missiles are going to get fired? No, that's not what I'm saying at all. What I'm trying to say is that in my 8 years of trading, time and time again, me following my TA, me following what the charts were telling me has kept me on the right side of these market events. It even held true for COVID. Those of you who were following me back then, you guys will remember this zone right over here leading into the massive jump. I was looking to bid this zone. In fact, I did bid this zone over here, but I had a thesis. I said that, hey, if Bitcoin doesn't close above this entire zone here, then I will be exiting my trade. I don't care what happens after that. And in fact, Bitcoin did rally into that entire week, and I sold into it. Why? Because my TA said, nope, this zone needs to hold. And if it doesn't, Sean, exit and reevaluate. Now, did I know COVID was going to happen? Hell no. But my TA made me exit. This is a very similar setup to what is going on currently, where we are saying, hey, we will bid the zone over here, and as long as the zone is holding, we will stay bullish. If the zone is lost, however, I will simply exit my trade, and then I will be protected, in which case, if there's any escalation on the geopolitical front, I will be protected if we see that big move down to the bottom of the cloud. But as long as we're holding the zone over here, guys, I will continue looking for upside. But what kind of upside? Let's go ahead and wrap up this video with targets. Now, while there are interim targets of around $85,000, if we start seeing great monthly candle closes above that $65,000 level, and especially above the $68,000 level, then in that case, I want to draw your attention back to this massive cup and handle pattern that we talked about in our previous videos, where we have two targets marked out over here. Our first target would be around $120,000, and the second target is $220,000. Now, of course, the first target is far more probable than the second target, but you cannot discount the second target either. And guys, this is exactly why I say do not let these events shake you out, because there's asymmetric upside opportunity over here. If we are wrong on this idea and we lose this zone, by all means, that's fine. That's mango. That's easy. That's stress free. We simply exit the trade and look to reposition for a better opportunity. However, if you get shook out over here on a support zone and then price indeed does make its way up to these targets, you are going to feel extremely silly for not keeping it mango and not capturing this life changing win. With that, I'm going to wrap up the video here. If you guys have been enjoying these daily updates, please let me know again by either hitting the subscribe button or leaving a comment down below. You guys have no idea how motivating it has been to see you guys subscribe, and also your comments go a very, very long way. I'll see you guys in the next one. Keep it mango, keep it easy, keep it stress free. Ciao.